Hi everybody, welcome back to Ox Talks. It is October 27th, 2023. Hope you're having a good Friday today and hope you have some plans for the weekend to hopefully clear your mind and take stock of where you are at individually and with your family. And when I mean take stock, I mean assess financially where you're at. Are you doing everything you can do to maximize your income streams? Have you considered starting your own business? Have you considered trying to tack on a side business or side hustle of some kind to at least supplement your existing 9-to-5 job? Anything you can do to make yourself more resilient and insulate yourself from being 100% beholden to an employer or a boss for your financial security, from my perspective, can only make you better. By the way, if you're enjoying the content of the videos, I'm trying to post one every day. I'm trying to keep them under 15 minutes if possible. Sometimes I ramble on a bit. That's the lawyer in me, I suppose, but I'm trying to shoot for that 12 to 15 minute mark. And again, if you're enjoying the content, if you're getting something out of it, please subscribe to the channel and please share the videos with your friends. We talk about making prudent decisions, keeping a guarded mindset right now with where everything is going with the economy and with the world in general. I was having dinner last night with a good friend of mine, and he lives down in Orange County, California, in a fairly affluent area. He's a retired, very successful executive for a company. And he was telling me that he has a friend of his who's about 47 years old. This individual is a residential real estate agent in Orange County. Again, very affluent area. Home prices are some of the highest in the nation. So he has a younger girlfriend, this friend of his, who was telling him the story. They just closed on a $2.6 million property in Corona del Mar, California. They have 2 cars with car payments, and he sells real estate for a living. Evidently, he's doing quite well. He told my friend that the mortgage payment on his house every month is $16,000. It does not include taxes. It does not include the insurance, the maintenance. It does not include the car payments he has and all the other items in his life that he has to continue to debt service. And my friend said, are you paying attention to what's going on here? Are you watching what's happening? Are you watching how the economy is imploding, how inflation is getting worse, how interest rates are going up, spiking substantially? And he said, man, your debt service on all of this stuff, how are you going to handle this if your home sales dry up? And this person's response was, I don't want to talk about that. And I thought that was a very interesting, but you hear this often, where people are just burying their heads in the sand. They don't want to accept the reality of their situation, number one, but number two, they also don't want to make adjustments to change their situation, to start to reduce their debt levels, and to look out on the horizon and try to understand what is coming. It's like this idea that everything is going to continue as is forever. It's going to all be bliss, and I hate to tell you, but it's not going to end. It's not going to end well for this person and for thousands and millions of others that are overextending themselves, not paying down debt, not doing everything they can to tighten in the reins, and discussed yesterday stepping back off the ledge a bit and evaluating have a real heart-to-heart about where you are. Everybody's in a different situation. It doesn't matter what your income bracket is. You can make adjustments and changes within your particular situation. I saw an article that came out, this is CNBC, and it was yesterday. It says how the long-awaited recession became a rich session for America's wealthy. And we're talking about how this plays into the wealthy having big positions in the stock market. As we have been seeing the last few days, the market's been dropping substantially. It says sticky inflation, white-collar layoffs, and surging interest rates are all putting pressure on a certain type of American, higher income earners. It says what we normally see in an economic recession is that lower and moderate income households really bear the brunt of it in terms of job losses and financial hardships, said Greg McBride, senior financial analyst at Bankrate.com. He says, we haven't seen that. I beg to differ. I think that the lower and middle income classes are feeling beat up each and every day with the food prices, the gas prices, the cost of health care, the cost of home insurance, auto insurance. I don't agree with that statement, but it says the stock market, a source of wealth for the rich, struggled in 2022. The S&P 500 sank more than 19%. And that same year, 1.8 million Americans lost their millionaire status, according to UBS 2023 Global Wealth Survey. Despite the stock market summer rally this year, the U.S. economy still faces several headwinds. It says Bank of America's Consumer Checkpoint Survey for September of 2023 found that high-income households have become more pessimistic about the economy. The same group also appears more cautious about spending because of soft wage growth and slowing job creation for high earners. I have a really good friend of mine who sold a very successful business in Dallas, Texas many, many years ago. And he had amassed himself a nice net worth. It was probably in the $10 million range. But he had most of that net worth tied up in the stock market. And we're going back to the early 2000s now, and you know what was going on then was the dot-com bubble. He was piling his money into the stock market. And when the dot-com bubble burst, he was caught in a very, very bad place. And every time those stocks would drop, he was buying the dip on the belief that everything was going to bounce and be fine. And it didn't. For most of those stocks, they never came back. And he lost, I believe around 80% or more of his net worth because he rode that thing all the way down in flames. Never thinking, let's take these chips off the table and live to fight another day. He couldn't even have spent the interest on how much of a principal estate he had amassed for himself had he preserved it, or even preserved the lion's share of it. I have another good friend of mine I talk to basically almost every day. And while the stocks have been dropping this week, he's been, texting out little quibs of stocks that are doing well. And my response is, yeah, but what about the rest of your portfolio? So it's almost like these guys justify it. They try to make you think, well, look, it's really not that bad. And I know the numbers, it's bad. So every time it drops, I'll say, hey, what are you going to do today? Are you taking some chips off the table? Are you getting defensive? Do you have some hedges in? Do you have some stop losses? And the answer is always no. He's always long stocks, so he only makes money if the stocks go up. Most of the portfolio, his portfolio is in his 401k. So, he's trading with his retirement assets. The reality is that on 401ks, and I'm not a financial advisor, I'm not a financial expert, but my understanding is 401k money, it goes in as pre-tax dollars. So eventually when you do draw that money out of your 401k, you pay taxes on that money. So if a 401k portfolio that's comprised of a whole bunch of stocks in the stock market, if the principal value of that portfolio drops, you have a double whammy. You're going to get hit with your value dropping, and you're also going to then, whatever you have left, you're going to pay taxes when you take it out. So keep that in mind. I know I'm not saying I'm anti-stock market. I don't spend much time with that. I know that a lot of wealth is created by the stock market, but I also know that a lot of wealth is destroyed by the stock market. So if the wealthy start pulling back, and these stocks continue to drop, thereby affecting the higher net worth individuals, that's going to have a reverberation effect through the economy. So, and then that all trickles down to you and I, folks. Okay, so keep watching what's going on. Interestingly, I just was going through some old articles I had here, and I had one from The Guardian dated October 13th. And it was entitled "J.P. Morgan CEO Warns World May Be Facing Most Dangerous Time in Decades." And he says, Jamie Dimon says, the war in Ukraine, compounded by last week's attacks on Israel, which now, of course, is several weeks old, may have far-reaching impacts on energy and food markets, global trade, and geopolitical relationships. This may be the most dangerous time the world has seen in decades. And the article concludes by saying net profits at JP Morgan jumped 35% to $13.15 billion in the same 3 months to end September. Revenue at the bank rose 22% to $39.87 billion. So the earnings were fantastic, right? So today, which I'm sure you might have seen, Jamie Dimon comes out, or might have come out last night, and said that he plans to sell 1 million shares of his stock in JP Morgan. And the article was over on Zero Hedge last night. It said, for the first time in his long and tempest-full tenure at the CEO of JP Morgan, Jamie Dimon has decided the time is right to dump 1 million shares in the mega bank. And it's worth about $140 million. It says Dimon and his family will dispose of 1 million of the bank's shares, which amounts to around $140 million haul, and the CEO's first such stock sale during his tenure at the company. So why is the head of that bank, and he, by the way, he's a billionaire, why is he selling his stock in his company at the same time that the revenues and profits of the company are rising? I mean, that should give everybody pause, because again, these guys at the top, they get the information before we do. They know a lot more than we do at the top levels, and it obviously should give all of us pause for concern. Obviously, we know the banks have had some troubles in the last months, but JP Morgan is the big bank. So he's selling shares, and we'll see if that is not just the first sale of his shares, but maybe more to come. Last article I want to share with you came out of Market Watch, and it says gold is officially outperforming stocks in 2023 as October rally continues. It's official. Due to an October rally that has brought the price of an ounce of yellow metal to the cusp of $2,000 mark, a level it's not seen since May. Well, I'll tell you today, the gold market closed, and spot gold did close over $2,000. I want to say about $2,004, $2,005. Silver also had a nice day today and closed over $23. I wouldn't be surprised if this rally continues. I'm not telling you to run out and buy metals. I'm not telling you to do anything. I'm just saying that, with the uncertainty in the world, if the stock market decline continues to unfold, you may see, prices buoyed even more for gold and silver. And, for the most part, silver is so undervalued right now that you want to, in my opinion, keep a real watch on that. I was having a discussion with Jeremiah Babe earlier today, and he had been talking with Bill Holter about the value of silver, and why it's so important to have this stuff in the physical form. So the article goes on to say, as of Thursday's close, the S&P 500 has gained 7.8% since January 1st, while front month gold futures have gained 9.2% during the same period. That was according to the Dow Jones market data. Gold futures for October delivery, the current front month contract, gained $3.10 per troy ounce, or 0.16%, to $1,987 on Thursday. Its highest settlement value since May 16th, according to FactSet data. Since the start of October, it has risen more than 7.5%. Look, a lot of that's due, obviously, to the conflict in Israel. Just by comparison, the S&P 500 is down 3.5% month to date as it heads for a third straight month in the red. If it finishes October in the red, it would mark the first time the large cap index has fallen for 3 consecutive months since March of 2020. It says gold also outperformed stocks in 2022 and in 2020. 2020, gold futures rose 24.4% compared to the S&P 500 16.3% gain. So I hear from all my stock market buddies that they want every dollar working for them in the market, that the metals don't have any yield, and therefore they're not a place that they want to be. But overall, when you have when you're comparing performance, and you're seeing how gold in general is outperforming certain segments of the market, it's something to think about in a diversified portfolio. Again, I know I've harped on it several times. I'll continue to repeat that because it is worth repeating. So, what am I doing this weekend? I'm going to be working most of the weekend. I am taking a deposition on Monday in a construction case I have. A deposition is basically when I subpoena a witness. We go into a conference room setting. There's a court reporter usually present, a stenographer, usually a videographer as well. And under oath, I ask this witness questions. And the witness has to answer my questions. The witness has to review any documents I put before him or her and respond about the documents. The purpose of a deposition is to gather evidence in a case. Everything that the parties say in the deposition room, it's all taken down by the court reporter and videoed by the videographer. And then there's a transcript of that proceeding, which is created. It's the deposition booklet. And basically then if this case goes to trial, I'm able to use that as evidence in the case. Some ways we use that is for impeachment. If a witness shows up at trial and they testified one way at trial but said something differently a year before in deposition, I can bring out that transcript in front of the jury and direct the jury's attention to portions of the witness's prior testimony that were inconsistent, and that can be used to undermine the credibility of a witness. And then it's primarily just to also lock in a witness's testimony so you know what they're saying today they're presumably going to say down the road at trial. So I have to probably put about 8 to 10 hours in this weekend preparing for that deposition Monday, and I anticipate that the deposition will probably take about 7 hours on Monday. So I may not be able to get a video up Monday, but I hope to see you all over the weekend. And again, keep these things in mind. Sit back and look at your overall situation. Make notes, keep a log. How is your financial situation going? How is your preparedness going with regard to your water supplies and your food supplies? With that being said, try to get your workout in today. Don't miss it. There's no reason why you can't be getting 15 minutes or half an hour of walking in or steps in today, a few push-ups, a few sit-ups, and keep that water intake going. I will see all of you most likely over the weekend. Thanks.